Microsoft hits $4 trillion milestone, the AI revolution driving tech giants. The $1 trillion club just got a whole lot more exclusive, and it's all thanks to AI. In a stunning display of market might, tech titans Meta and Microsoft have added a whopping $400 billion to their combined market values, with their shares soaring to dizzying heights. The two companies now boast a combined value that eclipses the worth of J.P. Morgan Chase, America's largest bank, and Walmart, the country's largest retailer, by a staggering 7-fold margin. But here's where it gets really interesting. Microsoft has briefly become the second company in history to breach the $4 trillion market value threshold, joining the exclusive club alongside Nvidia. Although its value retreated slightly to $3.97 trillion by the end of trading, this milestone is a testament to the company's relentless pursuit of innovation and growth. Meanwhile, Meta, the parent company of Facebook and Instagram, is on the cusp of crossing the $2 trillion mark, with its shares closing 11.25% higher on the day. Microsoft shares also saw a significant boost, rising by around 5%. So, what's behind this sudden surge in stock prices? The answer lies in the better-than-expected financial results, which have been fueled in part by the artificial intelligence revolution. Both Meta and Microsoft have added a staggering $200 billion to their market values since Wednesday's close, with Microsoft reporting an 18% increase in revenue to $76 billion in the last 3 months. But here's the part most people miss. Microsoft's plans to spend over $30 billion in the next 3 months, primarily on expanding its cloud services to support the booming AI usage, are a clear indication of the company's commitment to staying ahead of the curve. Meta, on the other hand, reported a 22% surge in revenue to almost Allah. Stock market update. Microsoft Meta surge. Amazon Apple earnings incoming. July 31st, 2025. The stock market is on a roller coaster ride, and today's twists left many investors clutching their seats. While some tech giants soared to record highs, others stumbled, and the broader market struggled to maintain momentum. But here's where it gets controversial. Is this tug-of-war between winners and losers a sign of a healthier, more balanced market, or a warning that the tech-driven rally is showing cracks? Let's dive into the details. The day began with a burst of optimism, but that fizz quickly faded as traders digested the latest earnings reports and economic data. Microsoft and Meta emerged as standout performers, with Microsoft briefly crossing the $4 trillion valuation threshold, a milestone achieved by only 2 companies in history. Meta, meanwhile, surged 11.3% after its AI-powered ad business outperformed expectations. Yet, not all tech stocks were celebrating. Semiconductor manufacturers like Broadcom and Nvidia saw declines, dragging down the PHLX Semiconductor Index by 3.1%. Ellen Hazen, a market strategist at FL Putnam, noted the stark contrast. Some tech companies are thriving, while others are struggling to keep up. The S&P 500 saw 80.8% of its reporting companies beat earnings estimates, a slight improvement over the past 4 quarters. However, Amazon's post-market slide after its cloud computing results fell short of expectations, reminded investors that even megacaps aren't immune to scrutiny. The Dow, S&P 500, and Nasdaq all closed lower, with the Dow dropping 0.74%, and the Nasdaq barely eking out a 0.03% decline. For context, the Nasdaq hasn't seen a 1% daily swing since early July, signaling a market in a holding pattern. Economic data added fuel to the uncertainty. June's inflation report showed prices rising, partly due to new tariffs, while jobless claims suggested the labor market remains resilient. Investors now turn their attention to Friday's non-farm payrolls report and looming tariff deadlines. President Trump's recent move to grant Mexico a 90-day reprieve on higher tariffs has sparked debate. Will this delay ease market nerves? Or is it just a temporary fix before tensions escalate? And this is the part most people miss. The pharmaceutical sector took a hit after Trump pressured 17 major drug companies to lower prices. The NYSE ARCA Pharmaceutical Index plummeted 2.9%, marking its worst drop since May. This raises a critical question. Should investors be wary of sectors facing direct political pressure, or is this a short-term blip? Looking ahead, the market's next moves will hinge on a delicate balance. Can tech's momentum sustain the broader indices, or will sector-specific headwinds force a broader correction? Share your thoughts. Do you think the current reliance on a handful of tech stocks is a sustainable trend, or is the market overdue for a more diversified rally? What role will Trump's tariff policies play in shaping the rest of the year? We'd love to hear your take in the comments.